All right. Okay. Hi, everybody. Hopefully this is working. I guess I won't know until I'm on the back end. This is the first time I'm streaming live to the group, and it's like a whole roundabout way that you got to do it now instead of just directly. So hopefully this works out okay. But anyways, thank you for joining me. I'm really excited to begin this series for the masterclass, calling it the profit sphere because that is kind of our terminology for how we work with businesses. We really want to come in and support them in a very holistic way. So, profit sphere, as in like all encompassing, with an emphasis and focus on profit. So, I thought it would be appropriate to start this series here in March. In the midst of tax season, to talk about taxes. So here we are today talking about that. So let me get my PowerPoint up here. All right, so tax stress, not here. So if you can see this, if you're watching it live, put live in the comments. If you're watching the replay, put replay in the comments. Anybody who puts a comment in is going to be able to get our business tax preparation toolkit, which is really an awesome resource that I put together. It has all of the tax deductions that you can probably think of. It has a business checklist, tax prep checklist. It has FAQs in it. It has the calendar of dates for you. Let's see what else. It talks about estimated taxes and the best way to go about doing that and some tips on how to calculate that. So it's packed full of resources for you. And I'm really excited to be able to give that to anybody that puts a comment. So please comment if you're live. Hopefully I'll be able to see your comments as well if there's any questions that do come up. But otherwise, thanks for coming. Thanks for watching. Let's dig in. All right. So just as an introduction, in case we have a lot of new people coming into the group as well, I'm Megan Schwan. I'm the CEO and founder of Sidekick Accounting. And I'm also a solo single mom of four, although my daughter is now married and out of the house. I've been a business owner for over a decade. So I've had Sidekick for 11 years now. And I'm an accountant, tax strategist, business consultant, and author. Our mission here at Sidekick Accounting is to change the statistic that 8 out of 10 small businesses fail. And if you really think about that, that's pretty staggering. And the truth is that most of the time, the reason why businesses fail is because of some kind of financial related reason. So we help empower business owners by doing things like this, doing classes. I do a lot of classes through other organizations as well. This year I'm working on getting on more podcasts and just kind of getting the word and conversations out there and normalizing that. I'm originally from Wisconsin, but I now live in North Central Florida. And so we love going to the beach. I love crafting, reading, learning, hiking, traveling, and taking naps. So just a little bit about me. And hopefully as you start to watch our master classes and come on board, you'll get to know me a little bit and I'll get to know you a little bit. And I'm really excited about that. Okay, so first thing first, have you ever been stressed by taxes? Watching in the comments, please put stressed. If you've ever felt stressed. Amen, right? You're not alone. The truth is that approximately 51% of small businesses report that navigating regulatory compliance, which is basically like keeping up with taxes, right? That's something that's regulated and we have to be compliant about it, is that negatively impacts their growth. So 51% say that having to navigate that impacts their growth negatively. 1 in 10 small businesses have been fined for non-regulatory or for regulatory non-compliance with an average penalty of about $30,000. So that means not paying your taxes on time, not filing your taxes on time. Those are two of the biggest ways that you can get penalized. So 1 out of 10 small businesses have had that happen to them. 32% of self-employed workers admit to not reporting all of their income to the IRS. So we want to make sure we don't do that because that is non-compliatory. And as we are now moving more and more into the digital age, as we all know, that means that more and more information is accessed in good and bad ways. So it's becoming harder and harder to sneak things under the table, which we're not supposed to do anyways, by the way, but it's becoming even more and more tricky. So really being able to understand taxes, have a good understanding of it, being better prepared is really going to help you in the long run. Okay, so let's talk about what are some additional benefits for staying tax ready. First, one benefit is to counter all of those crazy statistics we just looked at. We also want to make sure we're doing it to avoid the penalties and last minute stress, right? Like that's what we're here to talk about is how to make taxes less stressful. So a good way to do that is to stay tax ready. Another thing that is a benefit is that you're able to keep more of your hard-earned money. The truth is that when you're rushing, when you're doing this stuff last minute, when you're preparing last minute, you're probably missing things. And so we want to make sure that we are keeping more of our hard-earned money. We're being proactive and educated and not paying those penalties and interest because we're more on top of it. And then ultimately that helps you keep your money more. It also helps to build confidence and stability. I don't know about you, but I know when I am more prepared for things, I do feel more confident and I can show up better. And it also helps like when we know what to expect a little bit because of that planning, because of that projecting, projections, looking at the numbers ahead of time, it helps to create more stability, right? Because then we have more time to plan and it's not so much up and down. And then it also helps to ensure that you have a smooth business growth. Because the truth is that if we grow our businesses the way we want to, the way that makes them profitable, is that we are going to have to owe taxes. The thing is that owing taxes isn't bad. Overpaying in taxes is bad. And we don't want to do that. And we want to make sure that we're really taking advantage of everything that's out there for us as business owners so that even as we grow, we know what to expect, we know what's coming, we know how to counteract that. So showing up and being ready is definitely ways to make that happen. Okay, so let's talk about some of the key tax deadlines because as we just talked about, a big reason why people have a lot of stress related to taxes is because they're rushing, they're missing the deadlines, they're getting penalized for that. So what are some of those things that you need to know? First of all, quarterly estimated taxes are due quarterly, which doesn't necessarily mean on the calendar quarter, as you can see. The IRS kind of has it a little bit weird. April 15th or whatever that next business day is, if April 15th is over the weekend, it'd be the next business day with all of these dates. So April 15th, June 15th, September 15th, and January 15th are the standards. If those dates happen on the weekends, then it's whatever the next business day is. For instance, right now we're getting ready for the 1120S and 1065. So S Corp and partnership returns are due technically on March 15th. March 15th is Saturday. So the deadline is actually March 17th this year. So it can change year to year, but these are the standard dates that are there for the annual estimated taxes. Your next annual tax filings is March 15th, like I just said, for S Corps and partnerships, and then April 15th for sole proprietors, single member LLCs, and then I don't have it on here, but C Corps are also due on April 15th as well. 1099 and W-2 filings. Those were due in January, the end of January. If you have not filed your 1099s or W-2s, make sure that you do those as soon as possible. Typically, there is a possibility that there may be penalties assessed. In our experience, we haven't seen anybody get penalized by that, but you want to do it as soon as you can. And next year, for 2025, make sure you file them before January 31st of 2026. All right, and then state and local tax deadlines. When it comes to income taxes, they're pretty similar or the same as the annual tax filings. Sometimes there are different things depending on, you know, if it's, we're talking about sales tax, quarterly taxes. Typically it goes off of the federal for most states, but some states do vary. So make sure that you're looking at your state requirements and that you are aware of what those deadlines are. Being in the know, keeping track of it is really going to help you in the long run. So snapshot this, if you will, so that you can remember what these dates are. All right, so some common tax mistakes and how to avoid them, right? Because at the end of the day, we want to make sure that we are being as proactive as we can when it comes to our business. So let's talk about what these mistakes are and how to avoid them. So biggest one, like we said, I'm going to keep reiterating it, missing deadlines. That equals IRS penalties. So a suggestion for you is to know the dates. You have a way to avoid making that mistake, right? Know the dates. You can even put it in your calendar. Another common tax mistake is inaccurate income reporting. Inaccurate income reporting equals red flags for audits. And now this is going to be something that, you know, is going to become more and more of an issue, I think, because of AI. Honestly, I think the IRS is going to start using AI a lot more to be able to red flag certain areas and certain things. And so inaccurate income reporting can mean, you know, what was reported on your 1099 versus what was reported on your return. It could even be, you know, it could even get to the point, honestly, like where the deposits in your bank account are reviewed in some capacity. So making sure that you're accurately reporting your income is going to be really, really important, especially when it comes to things that are going to be reported to the IRS as well. So we can avoid this mistake by keeping accurate books, right? Make sure that your bookkeeping is up to date. Make sure it is consistently being taken care of because that is going to help you really keep track of your income. The other thing you want to do is make sure that you verify your 1099s to the income that you're reporting. So make sure that those numbers are consistent with each other. If not, make sure you're going back to whoever you're working with and say, hey, this doesn't match my number, you know, like where did your number come from? So make sure you're staying on top of those things so you can ask those questions. And then another thing to consider is making sure that you account for your merchant account fees. So sometimes we'll get, you know, if you're using a POS system, you'll get a deposit after the fee is taken out. And if you're not reporting that correctly in your books, you might show a lower income than what's being reported to the IRS. Even though it's legitimate, they're still going to get like that 1099 that says you got $10,000, but after the fees were taken out, you only deposited or you only had deposits of, I don't know, $9,400, you know, so that $600 is missing in there. So making sure that you're accounting for those merchant account fees, making sure that you're reporting your entire income before those fees are taken out is going to be really important. And then you just want to make sure that you're expensing those merchant account fees or credit card fees as well on the back end. Another mistake is poor record keeping. So making sure that you're not just focused on the income, but also on your expenses. You may be missing deductions if you aren't keeping good records on a consistent basis. So some things to help with that is to make sure that you're prioritizing your bookkeeping. Make sure that you're doing it consistently. And I'm not, honestly, not just saying that because I'm a bookkeeper, but I am emphasizing it. Because as a bookkeeper, we see this all the time where we have clients that we do taxes for or new clients that come on board where they haven't done it for months and months and months, sometimes even years. And you can't remember that far back. There's going to be things that are missed. Another good way to do is to make sure that you're being organized. How are you going to be recording deposits? Where are you keeping the copies of your receipts? When are you doing your bookkeeping? So staying organized is going to help you set up that system for your business of how you handle your money. And then make sure you review your financials regularly. So Make sure that even if you're not doing the bookkeeping, that you are looking at your reports, because you'll be able to see those red flags and some of those things that may come up a lot sooner the more often you're looking at things. Again, we want to believe that we can keep everything in our head and we can keep track of everything, but the reality is that most of the time we can't. There's just too many hats that we're wearing. There's too many demands on us. A lot of times how we think is attached to how we feel and isn't necessarily attached to the actual information that's out there. So reviewing your financials regularly can help bridge all those things together and connect all those things together, but it's going to help you be more involved with your business. It's going to help you be able to see things quicker. It's going to make sure that you're not missing those deductions that are rightfully yours that will help you lower your tax liability in the long run. Or make you a better decision maker in your business as well. So make sure you're keeping track of that. And then the final mistake people do or make is that they're not setting aside tax money. And trust me, I get it. It's really, really easy to not do this part. But if your business is making money and you're paying yourself pretty well and you've got things that are going on, and you're not doing it consistently, what's going to end up happening is you're going to end up owing. So then, or you will, if you end up owing, you're going to end up owing all that at one time, which is going to create a cash flow issue, right? Because instead of you putting, $200 a month away, you ended up having to pay $2,400 in one chunk if we did it over 12 months. So make sure that you're not doing that to yourself. You want to make sure that you're avoiding this by putting money aside. So set money aside for yourself for tax purposes. I usually recommend creating a separate bank account, and then and we'll talk about this too, but like you want to do it consistently where then you're putting money away into that account consistently. So you have that money stored up for when tax time is coming around. All right. So how do we keep our books organized all year long? Because I know this is a very common pain point for a lot of businesses and a lot of business owners. And that's totally fine, right? But we want to make sure that we are doing our best to avoid making this a stressful issue. We do need our books in order to do our taxes. So how can you keep them in order all year long? One is you want to be proactive, right? So use a bookkeeping software. I know people use spreadsheets, and spreadsheets can be helpful, but they can also be difficult as well, because you gotta figure out where to put the buckets. Your formulas can be messed up. It can be a whole thing. So I highly recommend using some kind of a bookkeeping software. Wave Apps is a really good one. That is usually low cost. Zoho Books is another one that I recommend. And then of course, QuickBooks. And if you are interested in any of those, or you need help with those, or if you want to talk about like how our company can hold subscriptions for you at a lower cost, please reach out, comment software in the comments if you see this video afterwards, and we can get you hooked up with that. Okay, so another big thing is make sure that you are keeping your business and personal finances separated. And even if you've been commingling them, as they say, up until this point, now you know better. Now you know. Keep them as separate as possible. This is going to help you be more organized with your books. But the other thing is it's going to help is if and when you get audited, it's going to help you to create that veil of separation between business and personal, which is important, because if you have everything commingled, the burden of proof is going to be on you even more so to prove that those expenses are actually business. The IRS can question whatever they want, and you make it easier for them to call things into question when you have things commingled. So make sure you have it separated as much as possible, so that they're not being commingled together. Keep those things separate. Even if you're just doing contractor work, if you're just a solopreneur, if you are doing something that's really on the side, but you're hoping to continue to grow it, keep it separate from each other to them. And it's usually pretty easy to open up a bank account. So there are no excuses when it comes to this. All right, the next thing you want to make sure you do is keep receipts and invoices digitized. One big reason for that is that most receipts these days fade like fast. Like sometimes even within the next week, Receipts used to last at least a couple of years. Now they don't. The paper, the ink, I don't know what it is, but most receipts are going to fade within a pretty short period of time. So make sure that you're using some kind of thing to keep it digitized. I know a lot of people buy things online now, so just make a folder in your inbox that says receipts and just drop them all in there. You want to make sure you have somewhere where you're putting them that you can easily access it if you ever need to. So make sure you're doing that. If you use systems like QuickBooks has a receipt capture element to it. Some banks are now adding that into their services as well. So just take a look at what's available to you, or you don't have to make it complicated. Like make a Google folder or use Evernote and make a thing in there that you can put it in there. You don't have to necessarily use a receipt software, but you want to create some kind of a system. And yes, it is a little bit of a pain in the butt typically to do receipts, but it's important and you want to make sure that you are organized, like I said, so that this isn't an issue when you're trying to do your taxes later or in the event that you get audited. All right, and then finally, to help you stay organized, make sure that you're scheduling monthly financial check-ins. I know this sounds really basic, but it is really something that is important. Okay, so tracking and deductions and estimated taxes. First, you want to make sure you know what your tax deductions are. Tax deductions for businesses are defined by the IRS as anything that is ordinary and necessary. And I know that sounds like really broad, and it is really broad, but the thing is that that's the lens that the IRS is going to look through when they are asking or you get questioned about your expenses. You're the one that's going to have to answer that question for those expenses that you're using. So make sure that you have that valid argument as to why your expenses are ordinary and necessary for your business. Take a look too. If you drop a comment on this video, even if you're watching the replay, I will send you our business tax preparation toolkit, which includes our exhaustive list of tax deductions. So it gives you a whole list of things that you could potentially deduct. Look through it with the lens of ordinary and necessary, but there are things on there that you probably haven't thought of that could be business deductions for you. So take a look at that. Make sure you drop a comment so I can send you a copy. And then estimated taxes. Estimated taxes are calculated based on your profit, and then you want to pay or at least save that number quarterly. So keeping up with your books is going to help you be able to calculate this number for your business so that you can put that money aside for yourself. And like I said, pro tip, open up a bank account for tax savings and then save about 25 to 30% of your net income. Your net income is your sales minus expenses. What's left over is your net income. So 25 to 30% of that, put it in a savings. Typically, that is going to be at least a good chunk, if not all or more, of what your tax liability is going to be. So keeping up with your books is going to help you make those calculations. All right, so tax compliance and business growth. I know this is a hard topic, and I know we're really flying through this training as well, but this is important. And a lot of people dread taxes, but I have found that the reason why is because people just don't know a lot about it. They don't know how to play the game, and they're not being proactive. So the best way to deal with taxes is to be proactive and to actually take action. So the best way to grow is to maintain compliance within this piece. It's important. And the more you grow, the more important it's going to be, the more scrutiny you can potentially be under. But then there's also some other things. Staying compliant can affect your lendability. So if you are planning on growing, if you're wanting to bring on an investor, if you're not tax compliant, you are going to make this part hard for you. If you're wanting to buy a home, your taxes need to be compliant. So they do look at those things in order to be able to do other things. So staying compliant is going to be really important. It helps to build trust as well because it shows your responsibility, right? So don't avoid it. Make sure you're addressing this. If you're behind, get caught up, contact us if you need any help or assistance with it. But staying compliant actually gives you a better reputation, a better look when it comes to working with lenders and investors. Another thing is that accurate tax records help with those business funding opportunities. So you need to have that information in place, having your bookkeeping in order. I can't tell you how many people we've helped working with places like WIBIC or other SBA lenders, we get people all the time that are like, I need help. I don't have financials in order, but I'm trying to get a loan. And so we got to help them hurry up and get their financials in order so that they can get a loan. Being proactive is going to take away that pressure, and it's going to leave you available to more opportunities. And then good financial habits lead to better decision making and scaling. So while this is a hard topic and it is annoying and nobody really wants to be paying taxes, I know. Trust me, I get it. At the end of the day, setting up these habits is really going to help you be a better business owner, and it's going to put you in this mindset and position to be able to grow and scale a lot better. So you're not going to have this hanging over your head. Okay, so some of your next steps, we went through a lot of information, but you want to implement a tax tracking system. So how are you doing your books? How are you making those estimated tax payments? Thinking about what is that system going to look like for your business is going to be really important. The next thing you want to do is make sure you set up reminders, calendar reminders for those tax deadlines so that you don't miss them anymore or even get penalized. And then, you can definitely work with a tax pro for expert advice. If you don't work with somebody for tax time, I would definitely recommend at least building that relationship so that if you have questions, you have somebody that you can ask. And then you want to make sure that you stay proactive and review your finances regularly. That is going to help you be in the driver's seat and do things better. Okay, so I just wanted to share with you real quick. We do have a service or a program for business owners that need a little bit more support throughout the year, even if they only need tax help. So our Premier Tax Access Pass includes live monthly open Q&As. You can ask specific questions about your tax situation. And we also help to keep you up to date on the latest tax laws and regulations throughout the year. And then 2 times a year, we do a one-on-one review and strategy meeting. So we take a look at where your numbers are at. We give you some advice. We give you some strategy that you can use. And then we also help with those estimated tax payments. So that can be really helpful. You get personalized consultations with a dedicated tax professional on my team. And then we do the estimated tax liability review and a strategic tax planning meeting. So make sure that if you are in need of some help, that you sign up for this program. It's $57 per month or $684 annually. And twice a year we meet individually, but then you have access to a professional all year long as well that is working on your behalf to help you be proactive. So definitely reach out if you want some more information on that. Otherwise, here's my contact information in general. Feel free to book a consult if you need it. Otherwise, take a look at our Premier Tax Access Pass service. I'll put a link to that in the comments for this video. And if you have any questions, please let me know. If you wouldn't mind, if you're watching the replay, drop a takeaway for me in the comments as well. I'd love to hear what helped, if you had any ahas, what you're going to do next in order to better prepare and make taxes less stressful. The way to make taxes less stressful is to learn more about it, be proactive, and not wait until it hits you in the face. All right, so thanks for joining me. Look out for the new events or the next classes that are coming up. I'm trying to schedule them out so that you know, and you can put that aside, that time aside, so you can get plugged in and you can watch them and ask questions and all that good stuff. Okay, so hopefully this all worked, and I will talk to you next time. Thanks, bye.